So we got tons of spending, we're printing money, and we got a chart here of Biden's tax increases, which certainly are not helping, is not helping anything. And this after, of course, Biden said he's not going to raise taxes on a vast majority of people, but of course he will. Hal Lambert is here. He's the founder and CEO of Point Bridge Capital and the former Ted Cruz National Finance Chair. Hal, how are you, sir?
Great to be on, Mike.
Really good to talk to you. So we got a few minutes here. Let's go to the beginning here. And ultimately, I want to ask you your financial advice on what people should do personally to prepare for this. But let's start from the beginning. What is inflation?
Well, inflation is the price of goods and services and the increase in the price of goods and services. So what you're seeing is inflation everywhere in this economy. And the average person sees it every day with gas prices. They see it with food prices. They see it with housing prices. It's showing up in all the economic data. So the people that watch the economic data, whether it's consumer price index, which monitors consumer prices, producer price index, which monitors manufactured good prices, it's literally everywhere. And it's a real problem. And the Fed is supposed to be the one that works to keep inflation under control. They do that by monitoring and adjusting interest rates. And the Fed, as we all know, has cut interest rates to basically zero. So that's not a sustainable and normal level to be at. And that's one of the reasons we're seeing inflation take off here. But of course, the other reason which you hit on is the fact that we have printed trillions of dollars, more than any time in the history of this country, in a very short period of time, and just handed it out to everybody out there. So it's a devaluation of our currency in purchasing terms is another way to look at inflation.
It's already bad. We already see it. Food prices, as you mentioned, lumber's a big one, et cetera. Do you see, as a financial guy, do you see any other data that's coming out that regular people like me don't, look at every day, and you're like, oh, check this out, everybody?
Yeah, I'd say, there's some esoteric numbers. Prices received in the manufacturing space is the highest. It's increased at the highest rate since 1981, as an example. So that means that the companies are having to take higher prices for their products to take in to make other products, and there's a number of reasons for that, but one of them is there's a supply chain shortage out there. They talk about it in the chip sector. You're seeing it if you go on and try to buy, let's say, a refrigerator. You're going to look at months waiting for a delivery because the internal chips, microprocessors of the computers are backlogged. They're not being produced like they were. So you've got shortages there. The Biden administration has appointed a committee, surprise, and Pete Buttigieg, the former mayor of an Indiana city, is now in charge of trying to fix the backlog problem of a global economy. I don't see that working out. I think the private sector knows how to do that.
Ridiculous. Well, all the microchips are now in people's arms from the vaccine. Oh, come on. I didn't need to go there, Hal. Sorry. I remove that, Al. I don't want to put you on the record.
They're in our foreheads. They're not our arms. They're in our foreheads.
Is inflation inevitable? Are we so deep into it with the spending and the printing that there's no way out, or is there something that could be done?
Well, we're going to have to grow our way out of it. But here's the issue. The Fed, people are saying, why isn't the Fed doing anything? The Fed is focused on unemployment. And one of the things that I'm going to say here that I haven't seen discussed anywhere else, actually, is the Fed is wrong on this because they're looking at a number going, oh, we're at 7% unemployment. That's too high. So we can keep interest rates low until we get the unemployment number to drop. Well, there really aren't 7% of the people unemployed because the government is paying them to stay home. So we actually have millions more people employed by our federal government to sit on their couch and play video games. And so that's a really skewed number that they're not taking that into account. And of course, we know that there are more job openings now than there are people looking for jobs. So we're seeing a rise in the cost of employees, which is one of the big factors that causes higher inflation, is if you are paying more and more for the same output for employees. So they have to raise prices of the finished goods, and inflation ensues. And the Fed is not taking into account that there are millions of people that are unemployed, but they're still getting paid.
Yeah, great point. Okay, what do we do, Hal? So trying to think of like the average person's concerns. So first of all, you got price of food going up, but we also got a 401k, right, that we've been dutifully putting money into. Maybe we got a little investment account over here in the stock market. We got kids who need school to be paid for, and we got some expenses in the near future here that are a little above and beyond what we'd of course like to be spending. And then we're gonna have inflation come, and all of our money's worth half of what it was. What do we do?
Yeah, it's tricky. Inflation typically, initial inflation typically causes higher stock prices in the beginning. So the stock market that's one of the reasons you're seeing it to continue to rally. I think it continues to rally through this year. At some point, it will get overvalued to a point that it becomes even extreme, and you're going to have but to hold cash right now is really, really difficult to do because you're losing that percentage of inflation every single year in cash. So right now we're looking at inflation rates that are as high as 5%. So you're technically losing 5% of the value of your money. So holding cash is not the place to be. And being in bonds, there's no return in bonds, but that's why you're continuing to see movements higher in stocks. So from a risk perspective, you need to have a long time horizon, but I think stocks are where you kind of need to be. People talk about Bitcoin. Bitcoin's very volatile. If you can stomach it, I think it's smart to have a small amount in Bitcoin. And then, of course, your house will probably continue in value if you have a home. So, if you've got assets and they're moving higher because of inflation, you're in good shape. But if you're someone that doesn't have any assets and you're basically living paycheck to paycheck, which are what many people are doing, those are the people that are going to get hurt, and those are the people that Biden is saying he's going to be helping, and it's simply really hurting them right now, and it's going to continue to. So I think they're in a very tough spot.
Such a great distinction. I want to focus on that real estate thing because I heard you mention your house, and I hear people say that like, oh, you got to get real estate does well during inflation. What does that mean exactly? And like, who's got money going around to buy like extra houses, right? So is there a way to invest in real estate without putting down massive down payments and all that stuff?
Yeah, I mean, I'm not recommending people start rolling up and putting money into houses. I'm just saying if you own a home, you're at least getting protection to some degree from inflation because of that. And the reason is this. So if lumber prices are going higher, they've stabled and dropped a little recently, but they're still much higher than they were. But as lumber prices move higher, it costs more to build a house, right? It costs more for the windows if the window prices are going up. It costs more for the sheetrock. So new homes cost more, which means that existing homes, they go up in value as an offset. So you end up with existing homes going up simply because the commodities inside your home have gone up in value, and it costs more to build new homes. So that's one area. But they're going to be very sensitive to interest rates. But the Fed is saying they're not raising interest rates for maybe till the end of 2023, I believe now. So they're signaling way out, which is crazy. And so that's going to cause prices to continue to probably rise in the real estate sector, at least for the near future.
Wow. That was deep and insightful. I want more of that. Like, subscribe, get more.